Hey everyone, and welcome back to the channel. My name is Real Estate Russ, and today we're going to be going over real estate investing. Whether you're a total newbie or you're just looking for some direction, this video is going to be packed with insights to help you get started today. We're going to break down the 5 biggest benefits of owning real estate, top strategies to start making money, and step-by-step instructions to help you take action right away. By the end of the video, you're going to feel confident and ready to dive right in. Let's go. All right, so we got to start with the star of the show, and that is cash flow. When you buy a property and rent it out, the rent that your tenants pay you can cover expenses like mortgage, tax, insurance, etc. That leaves you with extra cash in your pocket. That extra cash is called positive cash flow, and it's one of the most important things to look for in a rental property. Now, here's a fun way to think about it. Imagine you bought a house, and every month, it hands you $500. That's like your house becoming your side hustle, except it's a job you don't have to show up for. Multiply that by a few properties, and suddenly you've got a serious stream of passive income. But here's the key. Not all properties cash flow the same. Some markets are better, and some properties just have expenses that are more than the property's worth. A property in a booming rental area might bring in $2,000 a month for rent. But if the mortgage, taxes, insurance, and maintenance cost you $2,500, then you're stuck in a negative cash flow situation. When you're searching for properties, try to look for places where the rents outpace the expenses. This is why research is so critical. Stick with the right properties, and you can build a passive income machine that grows while you sleep. Okay, now let's talk about appreciation. This is one of the biggest perks of owning real estate. Over time, properties almost always go up in value. For example, a property bought today for $250,000 could easily be worth $275,000 in just a few years. And here's the best part. You don't have to do anything to make that happen. Why does this happen? Well, there's a few factors. Inflation makes prices rise over time, population growth increases demand for housing, and improvements in the infrastructure or the economy can boost local property values. Real estate's one of the few investments where you're almost guaranteed to see long-term growth. Let's say you buy a house for $300,000. If property values rise just 4.65%, which is the national average, in 10 years, that home will be worth $470,000. That's an extra $170,000 in equity just from holding on to the property. Now, appreciation isn't guaranteed in every market. Some areas grow faster than others, and market downturns can temporarily affect values. But real estate has one thing going for it. It always bounces back. Here's where real estate gets really fun. Leverage. Leverage is where you use other people's money, usually a bank loan, to buy a property. This allows you to control a much larger asset than you would be able to afford with just your own cash. For example, let's say you have $50,000 to invest. In the stock market, you could buy $50,000 worth of stock. But with real estate, you can take that $50,000 and put it down on a $250,000 house. When the property appreciates or generates cash flow, you're earning returns on the entire $250,000 asset, not just the $50,000 down payment. And that's the magic of leverage. You invest $50,000 in a property. The property appreciates by 4.65% per year. In 1 year, you've earned $11,625 on a $50,000 investment. And yes, leverage works both ways. If the property value dips, it can magnify your losses. That's why it's important to buy below market value and focus on properties with high cash flow so it can cushion those market fluctuations. Now let's talk about the silent wealth builder, principal reduction. This is basically just when you pay down the loan on a property. But the beauty of real estate is your tenants can do this for you. Every month they pay rent, and part of that money goes toward reducing the amount you owe on the mortgage. Over time, the balance shrinks and you're building more and more equity in the property. Think of it this way. Over time, you're owning more and more of the property, but you're not the one footing the bill. It's all thanks to your renters. Let's say you owe $200,000 on a property. After a year of renting it out, your tenant's payments have chipped away $10,000. That's $10,000 of equity you've built without lifting a finger. Multiply this over a portfolio of properties and you're sitting on some serious wealth. Okay, now taxes. Nobody likes them, but real estate can make them a whole lot less painful. The government lets you depreciate your property, which means you can deduct a portion of its value from your taxable income every year. For example, if you have a $300,000 property, you can write off about $10,000 every year for 27 and a half years. And here's the kicker. This isn't an out-of-pocket expense. It's just a paper loss that helps you lower your taxable income. That means that if you're earning $5,000 a year in cash flow from a property, depreciation might cancel that out. So you pay zero taxes on that income. Yeah, you heard that right, zero. Now that you know the benefits, how do you actually get started? Here are 3 strategies to kick things off. Buy and hold rentals. Buy a property, rent it out, and build wealth through cash flow and appreciation. This is the classic real estate strategy and perfect for beginners. Lease options. This involves renting a property to a tenant that has the option to buy it later. You can charge an upfront option fee and most likely a higher rent. Wholesaling. Find properties at a discount, lock them under contract, and sell that contract to another investor for a profit. This is a great strategy if you're low on cash because you don't actually have to buy the property yourself. Here's the bottom line. Real estate is one of the best ways to build wealth, but it all starts with that first step. Educate yourself. Watch videos like this one, read books, consume as much content on the subject as you can. Set clear goals. Decide how much cash flow or equity you want to build. Find a mentor. Someone experienced can help you save time and avoid costly mistakes. Take action. The best knowledge in the world won't help you unless you actually use it. Okay, so that's your crash course for real estate investing. If you found this video helpful, hit the like button, subscribe, and let us know in the comments. What's your first step to building your real estate empire? The best time to start was yesterday, but the second best time is right now. So get out there, take action, and make it happen. Thanks, everybody. We'll see you next week.